Hi, and welcome back to Small Caps. My name is Jess Burtick, and today I have the absolute pleasure of speaking with the CEO of an AI machine learning company called RocketBoots, and the CEO's name is Joel Rappolt. The ASX ticker code is ROC. Hi, Joel. It's wonderful to have you on the show.
G'day, Jess. Thanks very much for having me.
No problem. So, Joel, I think we should just delve straight in. Our Small Caps isn't aware of your company because this is our first interview. So I was hoping you could just give us a brief overview of the company and what RocketBoots does.
That'll be my pleasure. So yeah, look, RocketBoots, we've been around a while, but today we apply machine learning / AI to transform and sustain profitability for in-person service businesses. And this is important in today's age because digital continues to disrupt consumer behaviour for these types of businesses. So after winning a few cornerstone customers in Australia and New Zealand a few years ago, we raised some capital at IPO in 2021 to tackle the larger overseas markets of the UK, EU and the USA. As part of that IPO, we were also able to bring on a board of directors. Chairman of the board is the ex-CTO of Telstra, Hugh Bradlow, and he's been helping with our journey over the last 2 years. So we kicked off our first international marketing campaign in June 2022, and we had a goal to try and achieve cash break-even within 2 years, and we're nearly there. We won 7 major trials with tier 1 businesses. One of those was a multinational business operating globally. And if we convert any of these customers to contracts, combined, they operate over 12,000 sites. Now, why is that important to RocketBoots? Well, we charge an annual fee on a per site basis. So organisations that have a large number of sites sit heavily within our target market. I guess finally, any one of the trials that we've got at the moment, if they were to convert, they'd see us to a rollout, they'd see us through to cash break even. And we've got even more trials in the planning stage. And now, after that, nearly 2 years of testing our go-to-market, our international go-to-market playbook, we're confident that we've got a good set of processes and strategies, and the potential to really accelerate the growth of the business in the near future is real for us.
Yeah, fantastic. Thank you, Joel. And so you mentioned trials and you mentioned strategy and implementation. Can you run us through how this technology actually works? So let's talk about the technology.
Sure. Well, probably importantly, if we bring it from an umbrella perspective, well, what is it what are our propositions? And then I can explain the technology underneath it. So the propositions, so we help transform workforce planning. So we reduce staffing costs whilst improving service. Now, if you think of those two things, doesn't make any sense, because usually if you have less staff to service a customer, customers won't be serviced as well. We found a way to achieve both. We can reduce staffing costs and improve customer service, which is a major driver of loyalty, and also Net Promoter Score, which is an important customer satisfaction metric that banks and retailers used to test whether customers like their service. So transform workforce planning is one proposition. The other proposition is adaptive loss prevention. So this is preventing loss at the self-checkout or at the normal registers, but not just preventing loss. We also want to reduce the needless friction that has been created through the adoption of other technologies. So I'm pretty sure everybody would have experienced a self-checkout locking down on them and having to stand around waiting until the self-checkout was unlocked by a staff member. We want to get rid of that friction. That friction needs to go. So how does it work? So our software collects people movement and product recognition data through the use of on-site cameras. We do deploy a small Dell hardware device into the store to coordinate all the different cameras that we connect to. Any video that we use to create data is deleted on site, and this is very important, especially for our international clients from a data privacy perspective. So no video needs to leave site, but all of the data that we create on site is sent back to our servers, where we use it and where we're able to use the compute power of AWS, for example, to run our simulation and other supporting software. So we have a hybrid architecture where we use cameras on site to create data, and then that data is then processed in the cloud. What does the customer actually get after all of that data processing? Well, they get user interfaces. And most of these are either data visualization dashboards, which we have out of the box, which today we use Tableau, but customers are able to use whatever data visualization software they like. And we also have web applications. For example, we use a web application if there was an alert at a self-checkout. If there was a risk someone had stolen something, then we've got a user interface that brings that information to the attention of a supervisor in the area. So yeah, they're the three major parts: collecting data using our computer machine learning software, then processing that data in the cloud and running simulations and genetic optimization, and three, presenting that data back to customers in ways that they can use and derive benefits from our software. Probably key impact metrics that we work from with workforce planning. For every 100 sites the customer operates, we uncover about 50 full-time employees worth of cost savings. And that's not meaning that they lose their job. It actually, what it allows them to do is it allows them to point the staff's time at other fixed tasks within a supermarket or within a retail branch. So we redeploy, we call it redeployment of latent capacity. Identify opportunities to improve productivity for those in-person service locations. So staff members are used in a banking context. They can be used not just for in-person service, they can also be used to get on the call center and have a call with a customer or chat with a customer or answer online. There's a growing demand for online interactions with customers. So branch staff now are able to take time away from the in-person service, and now they can point their time at servicing the higher demand of the digital platforms, emails, call centers, chats, etc.
Yeah, so interesting. So basically optimizing employee productivity, which is really key.
Absolutely. Yeah, and pointing it at the right place as well. So don't have underutilized people in your branches. Improve product. Point them where you've got lots of customers that are waiting. Have you called a bank, or have you called someone online, even a telco where you've had to wait online a long time? Yeah, we want to reduce that wait time.
Yeah, amazing. Okay, and then obviously improving customer experience, which is key. So now, so Joel, you mentioned banking and also retail. Which customer sectors is the company specifically targeting?
Well, so we are all about in-person service. So we're about creating very, very unique data sets for how customers and staff use physical locations. So anything that has in-person service is a target area for us. However, we've found some great return on investment in our retail banking and our retail grocery propositions. So at the moment, because we are still, a team of sort of 12, we are focusing all of our attention on those propositions, and we see return on investments between 3 and over 10 times for those industries. So while ever we've got a good return on investment, we want to focus on those areas. But after we break even with cash and we win more contracts, there is an intention to expand our product catalog to look at other in-person service opportunities.
Fantastic. So there's obviously scalability opportunity outside of banking and retail, which would be interesting for investors. So now you mentioned customer loyalty just before. So customer loyalty is a major focus for retailers and banks, as we know. How does RocketBoots technology specifically improve customer service and also net promoter score, which you also mentioned? Explain this to us, please.
Okay, so a little bit of, I'll paint a bit of color around that. So the research suggests today that well, especially for retailers, only 40% of customers are loyal to a single grocery retailer. So that means that approximately 60% roam. Now, if a retailer consistently makes customers wait at checkout, the likelihood of converting the roamers to a loyal customer is reduced. And less loyal customers, less future revenue. And this problem comes from, so historically, retail banks and retailers used transactional data to decide staffing levels at tellers and checkouts. However, if you think about it, a customer transacts when they are leaving. So using this data to decide staffing levels, it's never considering how much a customer might have had to wait before they transacted. And this wait in the queue is a queue driver of loyalty, and also what we call NPS, or Net Promoter Score, detractor feedback. And this is the main type of feedback that a lot of organizations are interested in, because Net Promoter Score detractor feedback is a leading indicator of future revenue performance. And you'll find a lot of executives in retail banks will actually have a part of their remuneration set to a NPS KPI. So what do we do? So RocketBoots solves for this by changing the focus from when the customer leaves to when the customer arrives. And we do this using the various metrics that we've learned to capture using our software. And we use that to generate schedules. And these schedules are the lowest cost, and we call it service level based teller and checkout schedules. What does that actually mean? It sounds like a lot of words. So service level based teller or checkout schedules. So a service level is expressed as something like 80% of customers will be serviced within 5 minutes. So what we're doing is fundamentally we're moving these organizations from scheduling staff based on a target number of transactions to deciding how many staff are required to deliver that target service level, 80% of customers serviced within 5 minutes. Now, why is this important? Well, a customer doesn't care how many transactions you're doing. So let's optimize the business to what the customer really cares about. And what the customer cares about is how fast they get serviced. And that was only an example service level. We can optimize their staffing numbers to any service level they want. If they want to deliver really good service, they can lift the costs. If they want to reduce the service, then they can reduce the costs. But now the real, let's call it the lever of costs for these organizations is the service level that they would like to deliver. It's the first time we've seen it made possible anywhere for in-person service.
So interesting. Yeah. Yes, sorry, keep going.
Yeah, no, so the actual deliverable to a customer. So once we've collected the metrics and we can run simulation that generates the schedules for these tellers and checkouts. What that is every 15 we provide a schedule for a day in 15-minute increments. How many staff need to be in position to deliver the target service level? So we've been able to provide that now to many banks in Australia and New Zealand, and we also have our launch international bank out of the UK, which was previously announced on through the ASX portal.
So interesting, Joel. Now I want to focus a little bit on the retail side. So let's focus on the retail, not the banking side. Now, bricks and mortar retail faces a constant battle, as you know, between theft prevention and customer experience. So how does RocketBoots adaptive loss prevention software in particular strike a balance between those two priorities?
Well, yeah, I mean, as you know, self-checkout has helped reduce staffing costs and also increase the transactional capacity for retailers at peak times. And the latter is actually a really important one. They really wanted to increase transactional capacity at peak times. However, as the self-checkouts are adopted and they keep driving additional adoption, the theft has increased, and it's in stores it can be 1%, it can be well above 1% of the self-checkout sales in many stores, and this adds up to sizable losses. But to prevent the theft, as we've all experienced, many grocery store operators have activated loss prevention software, whether it be weights or other AI-based technology, which locks down the self-checkout when there's a risk of theft. But this creates friction at the checkout, resulting in unhappy customers, increased staffing costs. Every time that self-checkout gets locked, someone has to unlock it. that's money.
People
And
trading, by
it
the way, it
also,
happens to me all the time, and I'm not even trying to steal anything, and it happens to
yeah,
me.
no. So the costs of servicing false alerts is crazy. And we've got a US customer at the moment where they've seen margins eroded so much because they have to put so many staff there to supervise the self-checkouts that they're starting to rethink the way that they use self-checkouts and the way that they use traditional staff. So this is something that we're very focused on at the moment because the friction erodes the benefits of moving to self-checkout in the first place. So our adaptive loss prevention software enables retailers to not only prevent the loss, but also the needless friction. We do this by combining both our product recognition, so our loss prevention software, and our workforce planning capabilities. It's the marriage of these two different capabilities which allows customers to test different ways in which they can actually provide these alerts, so these loss prevention alerts back to customers or back to staff. There's so many different ways that they could do it. But the measurement of success shouldn't just be about how much loss they prevent. It should be how much loss do we prevent, what is the impact on the customer service, and also does it reduce the costs of staffing that particular the self-checkout area. So yeah, we've what would we call it? We've delivered let's call it an A/B testing platform that allows them to trial different types of alerts. So today you'd be familiar with the alert of close down the self-checkout. That's the alert you're familiar with. But what are all of the other options? How about if the customer could unlock the self-checkout by themselves? Would that be helpful?
Yes, it would be. And a lot less frustrating shopping experience, I'm not going to lie.
Yeah, and then it also reduces the need to have staff intervene as much. So it reduces the operating costs. But does it actually solve the loss problem? So this delicate balancing of those three key, let's call them KPIs, was loss prevented, did we reduce staff time, and did we improve the customer experience? This is core to our proposition for retailers who are looking to adopt self-checkout and also give customers good experience.
Yes, so interesting, Joel. Now, you just mentioned core proposition. I want to go back to a little bit earlier on where you mentioned, securing core customers and clients. Okay, now, given the early success of securing some of those really core clients and customers in Australia and abroad, what are your plans to expand the business now moving forward?
So we feel like we're in the first gear of when we're driving a car, and you look, as more cash comes in, like as we move beyond trials. So our trial process is the purpose of the trial is not to test the technology. The purpose of the trial is to test the return on investment. So we've of those 7 trials, we now have 3 that have completed the return on investment phase, and they're all looking, from a return on investment perspective, they're looking good. So as we continue to move our customers through that process, good ROI is a leading indicator of future contracts. So we're pretty buoyant that these opportunities are going to turn into additional cash coming into the business, and we're really excited about having that because we'll be able to change gears again. We plan to use we now have like 18 months, 2 years, like a proven international go-to-market playbook. We'll have international customer references, case studies. We already have our launch staff members in both the UK and the US, but we'd like to grow that sales and channel partner teams even further to accelerate the growth. But we need the cash, obviously, from these converted contracts to help us, accelerate the growth of our business internationally. So, yeah, changing gears, using everything that we've learnt and all of the referenceability that comes with having these new large customers. As I said, one of those is a multinational, so that would be a great one to win. But we want to go again with a big international marketing campaign and continue to win the space, actually. So in-person service, we feel is a space that we can win.
Yeah, so interesting, Joel. And this really feels like quite a grassroots strategy that the company's implementing. You're not testing whether the technology works. you're actually now testing and proving that there's a return on investment for your customers to adopt technology that you already know works. So that's
look,
interesting and powerful.
it's been a learning experience, so like, it takes time. To the point now where, historically we used to do trials that might run for 6 months, but we only do trials as long as it takes to prove ROI. So if it takes 2 weeks, it takes 2 weeks. If it takes 3 months, it takes 3 months. But what we like to do is we've got a template for return on investment. So we talk to the customers about how we're going to measure return on investment during the trial phase and what would be a success to them. If they saw a certain metric, an ROI number of 2x or 3x, what is the number that they would need to hit in order to trigger a broader rollout contract? So we go into our trials knowing that number. So in the trials, as soon as we see that number, we get quite excited about the potential of winning a larger contract with that customer.
Yeah, fantastic. And I suppose you continue to build your referral network. The more customers you service, you actually can show those data points in terms of return on investment. So it's kind of a self-fulfilling prophecy strategy, which is really cool.
Absolutely, that's exactly right.
Yeah, fantastic, Joel. Now, I just have one last question for you, which we ask all of our interviewees, which is, can you please provide our small caps audience with just 2 or 3 sort of key investment highlights as to why, ROC or RocketBoots should be on the investor watch list?
Yeah. So as I sort of mentioned, probably when we first opened up the conversation, like we're on the cusp of signing our first international contracts. Any one of those can take us to cash break even. So it puts the fundamentals of the business in a really good place. We've got proven machine learning technology that works with sort of Dell computers and NVIDIA GPUs with a massive international addressable market. If you look it up, how many retail branches are there globally? How many retail groceries are there globally? It's if you actually look in our last investor pack on the portal, ASX portal, you can actually see the size of the addressable market, but it's significant. Now, the other thing is over the past 18 months, we've proven and we've refined our international go-to-market playbook, and this is really key. So with that in hand and the cash from any of these first converted contracts, we feel that we're approaching an opportunity to really scale the sales team and to accelerate, well beyond where we've been over the last 18 months as we've been learning how to get our products to these international markets. So as a summary, we're on the cusp of sort of this international expansion that we targeted 2 years ago.
Yeah, fantastic. Thank you so much, Joel. Such an interesting story, one that I'm sure the small caps audience will really appreciate and enjoy listening to. So thank you so much. Such an interesting story, and also, super relevant in this age of AI and machine learning. So yeah, thank you so much for your insights. Yeah.
Thanks very much, Jess.